Today we are going to tell you a story that it looks like a movie but it's real. You will understand later how all money works, what America owes and why you should care. Imagine that you have a friend. Let's call him George, who has the ability to print money. Yes, just as you hear, he can create money from nothing. But one day George starts losing money. How can that be possible? We explain it to you. Change George's name to Jerome Powell. This is the head of the most powerful bank in the world, the United States Federal Reserve, who have always been in charge of printing all the dollars in the world and since 2022 have been losing money. This is so rare that the last time it happened was over 100 years ago, in 1916. Now you may wonder how someone who can lose money can literally print it. Has Powell gone crazy and started betting all his money on games? Or in volatile cryptocurrencies like Dogecoin? The answer is a little more complicated and has to do with something called the interest rate. Since March 2022, Powell has been trying to control inflation. Inflation is when the prices of things rise over time, precisely because they have printed a lot of money. Jerome has been raising something called interest rates. Interest rates are like the price you pay to borrow money. When interest rates are low, it is cheaper to borrow money. This can lead people and businesses to spend more, which can increase demand for goods and services. If demand exceeds supply, prices can rise, which can lead to higher inflation, and when interest rates rise it becomes more expensive to borrow money from banks. This means that people and businesses tend to borrow less money and spend less. When people spend less, demand for goods and services decreases, and when demand decreases, prices generally also decrease, which helps control inflation. But by raising interest rates, Jerome Powell has also made it more expensive for the United States to pay off its debt. Debt is money that the United States has borrowed from this Federal Reserve and has to return it. When interest rates rise, the cost of that debt also rises. Imagine that you owe your friend $10 and he charges you 1% interest per month. If he charges you 2% interest the following month, you will have to pay him more. This is what is happening with the United States national debt. The national debt is all that mountain of money that the country owes. Since the beginning of the pandemic, this mountain has grown almost 40%. Nowadays, it is so high that it reaches $33 trillion and it doesn't stop climbing. That's more money than you can imagine. Now, there is a lot of debate about what to do with this giant mountain of debt. Some economists say that if we don't start paying it now, our children will have to do so in the future. Other economists argue that this giant mountain is nothing more than an accounting trick and it's not that important. The government has the ability to put money in or take money out of the economy when it spends money on things like infrastructure or public services. It is adding money in the form of salaries, but when it collects taxes it is taking it away. In general, the government has taken away more money than it has added. Now, should the government aim for zero debt? Not necessarily. Debt is just a number in a ledger. We could erase that number, but that wouldn't change the fact that the government still have financial obligations to meet. Let's talk now about the Federal Reserve. At the end of July 2023, the Federal Reserve had a debt of about $33 trillion. The national debt is divided into two categories: intergovernmental debt and debt held by the public. Of the debt, approximately $25.7 billion was in the hands of the public. This does not mean that every person in the United States owes a certain amount of money. It is actually the other way around. It is money that the government owes to people, to insurance companies, to mutual funds, to pension funds, and even to other countries. In some cases the government borrows money for all of these things. It is sometimes said that if every person in the United States contributed to paying off the national debt, they would owe $98,000. And if we include only the taxpayers or the working class, each person would owe more than $250,000. But this is not exactly true. Imagine that the government is like a friend of yours who needs money but can't ask you directly. Instead, it issues a special paper called bonds. That says how much he owes you and when he will pay you. So if you ever bought one of these bonds, you actually lent money to the government. For example, suppose you bought a treasury bond for $1,000 directly on the government website. That means that the government owes you $1,000 and in exchange they pay interest. This is called public debt. Because you as an ordinary person have that money in your hands. But here comes the interesting part. As we have told you before, there is an entity called the Federal Reserve, which is like the government bank. Its job is to control the amount of money in circulation and set interest rates. It also lends money to the government by purchasing treasury bonds. This is where it gets a little complicated. Even though the Reservation Federal is part of the government, it is a private institution, which means that the debt they owe is considered part of the government's debt and is considered as debt in the hands of the public. It's kind of a strange mix. So of those enormous $26 trillion that the government owes, a portion is Federal Reserve debt. Let's talk about what the Federal Reserve does. When you have heard that the Fed prints money, they are not actually printing bills in a giant machine. What they do is buy things with money that they themselves create, such as mortgage-backed securities and treasury bonds. Mortgage-backed securities are a bit like packages of loans to buy houses. Imagine that banks lend money to many people to buy houses. They then bundle those loans together and sell them as packages to investors like the Federal Reserve. So the people who owed money to the banks now owe it to the Federal Reserve, because they have bought those loans from the bank. All of these purchases add to your balance sheet or portfolio full of financial assets. Why do they do this? Well, one of the things that the Federal Reserve tries to control is inflation, which is when the prices of things rise too much. They also try to keep interest rates under control. So when the Fed buys more assets and increases their balance sheet, it is as if they are injecting more money into the economy. This helps the economy grow faster, and this is called flexibility quantitative. Okay. Well, during early 2020 until March 2022, the Federal Reserve did a lot of this quantitative easing. Because of the pandemic, they bought a lot of bonds and assets to help keep the economy going while we faced difficult times. But here's something important you should know. When the Federal Reserve purchases assets such as those packages of loans backed by mortgages or government bonds, they are using money that they themselves generate. This is a somewhat peculiar process. When they say they are putting money into circulation in the economy, they are not printing more physical bills but rather creating digital money. It's like they can add numbers to their bank accounts without having to get that money from anywhere else. This money just created is used to purchase the assets mentioned above. By purchasing these assets, they are basically putting more money into the economy, which means there is more money available for people and businesses. This is often done when the economy needs a boost to grow faster or when interest rates are very low and they cannot lower them any further. So in addition to putting very low interest rates on loans, they directly make purchases to put money into the economy and don't wait for people to ask for loans. The idea behind this is that when there is more money in circulation, the people tend to spend more, which can help the economy grow. Here is the dilemma. If the Fed buys too many assets and puts too much money into circulation, that could cause inflation problems. But if they suddenly stop buying assets, they could slow growth economic and cause different economic problems. So to maintain balance, the Federal Reserve has to be very careful with the amount of assets they buy and how they do it. They have to think about the long term and how their actions will affect the overall economy. That's when Bitcoin, tech stocks, and the market real estate increased a lot in price. Why did this happen? Well, in large part this happened because the Federal Reserve was doing everything possible to prevent the financial market it will collapse. To achieve this, they were buying government bonds and mortgage-backed loans. This helped keep the market stable. Then people realized that the Fed was doing this and they started investing their money in things that were normally risky because they knew that the Fed was protecting the financial market. Didn't you realize that suddenly everyone became a financial expert? But here's the twist. At some point the Fed had to stop doing this, and when it did, it had to sell the things it had bought. This is called quantitative adjustment. When they sell these things, it is like taking money away from the economy. This can cause the economy to move very slowly. But here comes the important part. Are they losing money on these sales? Why? Federal Reserve debt mostly refers to bank reserves that commercial banks hold at the Federal Reserve. In other words, banks deposit money into special accounts in the Federal Reserve which are known as bank reserves. When they do so, they are essentially lending that money to the Federal Reserve. In exchange, the Federal Reserve pays interest to the banks for maintaining those reserves. This is done so that banks have incentives to maintain a certain amount of money available in the Federal Reserve, which helps maintain financial stability and liquidity, in case the bank faces a crisis and does not lend all the money. In the second quarter of 2023, they had around $5.5 trillion in government bonds that gave them a 2% profit and $2.6 trillion in mortgage-backed loans that gave them a 2.2% profit. But they were giving the banks 5% to keep their money in the Federal Reserve. So in summary, they were spending more money than they earned. In fact, in the first half of this year they obtained income of $88.4 billion but had to pay $141.8 billion in interest. That means they ended up with a loss of around $53 billion in the first half of the year. If they continue losing money at this rate, they could double those losses by end of the year. Now, why does all this matter? Here comes another important part. When the Federal Reserve ends up with more money than it spends at the end of the year, that extra money is sent to the United States Treasury. The Treasury is the entity responsible for paying the national debt. The Fed send that extra money to the Treasury so the government can pay its debts. But when they end up with less money than they spend, as is happening now, they don't send anything or even receive money from the Treasury. This is a problem. Because the national debt has always been very high in the United States, especially after economic crises or wars. For example, we saw a dramatic increase in debt in the late 2000s after the global financial crisis, and we saw another increase in debt during the coronavirus pandemic. What would be the shocks to our economy? This is important because when the Treasury has less money available, it affects how much the government can fund essential programs like retirement and social security, build infrastructure like roads and bridges, and invest in the country's future. The public debt is like a bill that we leave to the next generations. Similar to how we care about the environment and infrastructure we inherited from past generations. When the government has less money available due to Federal Reserve losses, we enter a two-way dilemma. The first is to borrow more money, and this is exactly what is happening today. However, this solution does not solve the problem in the long term but rather makes it worse. The second option is to increase taxes for everyone, which is unpopular and often avoided by governments and citizens. Nobody wants to pay more taxes. But it is a way to obtain additional revenue for the government. The critical problem here is that the government continues to accumulate debt day after day. Instead of using borrowed money to invest in things that will benefit the country in the long term, such as improving education or infrastructure. Sometimes they just spend it on things like aid programs, trips and conferences, office supplies and things like that without thinking about the future. This is where disagreements arise. Not all economists think alike about how to handle the national debt. Some believe that we should pay it to avoid future problems, while others think that it is not that serious. Debt is really not always bad, and this has been demonstrated by countries like Japan, that have been accumulating a lot of debt for a long time. They have a lot of money they owe compared to how fast that their economy grows. So here comes the question. Why Japan and the United States, who have a similar debt situation, have such different results? Economists have some ideas. One is that Japan has an aging population, while in the United States there are more young people working and making money. Furthermore, immigration policies and how money is handled are different in both countries. The United States has always benefited from immigrant labor, whereas in Japan immigration is limited. Then the demand for goods and services may be less dynamic. Fewer, younger people are entering the workforce and contributing to the demand for products and services, which can keep inflation under control or even result in deflation, which is a general decrease in prices. Now the Fed has met again and has decided to keep interest rates at 5.5%. But it leaves the door open to a new increase in 2024. So here's the moral of the story. The national debt is not necessarily bad if handled intelligently. We shouldn't print money endlessly to solve all our problems, but we shouldn't completely stop the government either. The national debt is like a giant mortgage that we must pay over time, and if managed well, it is something that enhances the growth of the society. But therein lies the problem, that the governments are the ones that manage it, and it has gotten out of hand for a long time. We hope you liked the video. If so, it would help us a lot if you left us a comment, since the YouTube neural network values it very much and thus recommends our videos to more people. Hit like and activate the bell to receive a notification when we upload our next video.